All right, Lisa. So on July 4th, President Trump signed the One Big Beautiful Bill, and a lot of big changes in there. So we're here today to unpack a few of those.
Absolutely. It was a big week last week. We had lots of changes. A lot of things happened very quickly. So a lot of tax changes that happened as part of this bill that affected businesses, individuals, pretty much everybody got a little touch of something, a little change. So, a few high levels, on the business side, we have changes to bonus depreciation, 179 expensing. Those that have research and development expenses can now deduct those. That's a huge change for those businesses that really have a lot of, research and development, technology businesses. We also had some 1202 changes.
Yep, some 1202 changes, increasing those limits for stock acquired after the enactment. So the old 1202 is still in play, and we have new 1202 that's enhanced for the qualified small business stock exclusion, which is huge.
That's huge for startup companies. Gives a lot of great tax breaks for the companies.
We had 163J, so the interest expense limitations. Now, there were some changes to how that's calculated, but the big headliner there is that now it's back and it's permanent to EBITDA. So your interest expense limitation is based off of EBITDA, which is a big deal.
That's a big deal for those that are subject to this limitation. It now means that they can actually be able to expense a lot more interest. And so this is a really big deal for those. But these business changes are great. It's going to take a while to digest a lot of these, figure out how they affect everybody. Now, on the other side of that, we also have, a lot of business credits, things like that are removed now. So there are some losers as well as some winners.
Yep.
And so it's going to be interesting to see how it all shakes out.
That's right. And that's a common theme with this legislation is how it was passed. It was passed through a process called reconciliation. So there have to be some revenue raisers in there, and there are. So Lisa, to your point, you will have some winners and some losers. But, by and large, a tax cut out there extending a lot of these provisions that were set to expire at the end of this year. There were some international changes to the international provisions.
That's right. There were changes to international. There are also some changes to nonprofits. Mm-hmm. So that's why we say everybody got a little bit of an effect to it. And then whenever we get to individuals had a lot of changes. Individuals were facing a lot of expiring tax provisions that were going to raise rates for a lot of people. And so primarily what they did was they just extended and made a lot of the 2017 tax cuts permanent. Mm-hmm. So that was the general feel of it. But there were a lot of changes as well. There were obviously the deduction for tips and overtime pay that got a lot of attention. Child tax credit got raised to $2,200 from $2,000, so that's a good one. What else was there?
An exemption for Social Security, for part of your Social Security.
Right.
So a part of the Social Security income can be exempt.
Right. So that was part to help middle income seniors, kind of help reduce that.
Lisa, there were also some changes to the itemized deductions and how those are calculated. Looks like a floor on charitable contributions.
Right. They did. They changed a little bit of everything, like always. What other thing for businesses? Just kind of an administrative thing, but it would make a big deal. 1099 reporting used to be that for a 1099 miscellaneous or NEC was for $600 of compensation, and that got raised to $2,000. So we think that will probably make it easier for businesses, maybe a little less burdensome to do your reporting.
Mm-hmm. And then with opportunity zones, those opportunity zones 2.0 is out there.
That is.
It's like a lot of enhancements to that program.
That is a lot of enhancements, a lot of new zones that are supposed to come out from it. So I think that's going to be a big change, drive a lot of development. Mm-hmm. And Adam, one more thing to kind of take that was on the table was the estate tax. So that got increased to $15 million per person, the exemption for it, which was a huge win. That was set to go back to about $7 million per person. And that's something good that gives taxpayers some certainty as far as for their estate plan and the near-term future.
So be sure to register for the One Big Beautiful webinar. We're going to be talking about a lot more of these provisions in detail. and unpacking how these provisions impact you or your business.